At this time, I will now turn this webinar over to Michelle for us to begin.
Hi, everybody. Good morning. Lots of good energy in the chat. I've seen a lot of good mornings, and thanks for tuning in despite the beautiful weather outside. My name is Michelle Kuipers. I'm from Ladder Up, one of our nonprofits here in Chicago. I'm going to start the presentation. I'm going to cover some basics about self-employment and taxes. And then the second half of the presentation is going to go to Michael Madroncic from the IRS to talk about all of the fantastic resources that the IRS has for small business and self-employed folks like you. So let's get things off since we got kind of a packed session here. I do want to talk a little bit about Ladder Up just because we have free services available for you. And since it's tax time right now, our volunteer income tax assistance program is on right now. So you can have your taxes done for free if you qualify. Our qualifications are income-based, but there are certain situations with business owners that might be out of scope for us, which is just to say that we don't train our volunteers how to do it. So if you're interested in free tax preparation, I advise you to contact us at the office and we can tell you whether you fall within or without of that scope. We also have a low-income taxpayer clinic. This is a legal assistance program that helps if you have a controversy or an issue with the IRS or Illinois Department of Revenue. You can also call us about any of those. Regardless of your income limit, we can help determine if you need further assistance and you qualify for that. And then finally, we do financial literacy programs, both for the adults, budgeting, banking, buying a house, credit score improvement, and for college age about things like the FAFSA and how to get into college with the lowest cost to you. So all of these services available to you through Ladder Up for free. A little more on our tax prep side because that's going on right now. Families, 64,000, individuals, 32,000. Right now we're doing the current tax year and then the expiring tax year, which is 2020. If you didn't know, if you didn't file your 2020, your refund for 2020 will expire on tax day on April 15th this year if you don't file. So urge you to file your 2020 return this tax year. And we have in-person sites and virtual available on our website. Our in-person sites are all around the city, many neighborhoods, north side, south side, central, and then western. We have also some suburban sites this year that we're excited about, and then a northern site in Waukegan that we're going to open in March. So lots of availability for in-person services. You can also have your taxes prepared online with us as well. So that's the exciting free services, but let's get into the meat of what we're talking about today. Why are we talking about taxes? For self-employed folks, if you have self-employment income of any kind, that means even if you're still working your full-time job and you're just doing a side hustle right now, if you have self-employment earnings of $400 or more, you have a filing requirement. You must file your taxes. So if you are working some other job and you normally wouldn't have to file because you don't make up to that filing threshold, which this year is about $13,000 for a single filer, doesn't matter if you have self-employment income, if it's over 400, you have to file. And I will note, I get this question a lot, how come that is lower than the amount required to be issued a 1099? It's $600 for a payor to issue you or more to issue you a 1099. So some people might be making more than 400 but less than 600 and they won't get a 1099. Nevertheless, you are still expected to file and report that self-employment income on your taxes. And we talked about self-employment income versus other types of income that might give you that 13,000 or more threshold for filing. What's the difference? The difference is your worker classification. And this is a worker classification comes from the law and is kind of governed by IRS regulations. So it comes down to an employee versus an independent contractor. It's really important for tax purposes to know what you fall into. And while some of these slides are going to be targeted at the taxpayer trying to figure out what their status is, if you are a business owner and you are paying people to do work for you, it's also important to know what their classification is or what their classification should be. It doesn't just get to be what you decide. There are rules about whether they fall under this classification. So if you're curious for your benefit or you're curious as a business owner who's paying somebody, recommend you pay attention to this framing, even if the slides are stated in the way that they are for the employee only. So what's an employee? An employee can be full or part-time, that doesn't matter, but generally they're working for a specific company or specific business. It's a set schedule that the payer is setting, and the employee doesn't get to have a say in necessarily, and that they're required to meet certain job descriptions. They can fall into health insurance or retirement. They don't necessarily have to be deemed an employee, but it's a good indicator. If someone is classified as an employee, they have to fill out a Form W-4. This is the IRS withholding form. It tells the employer how much to take out for taxes and essentially prepay on behalf of the employee to the IRS. For employees, a portion of that withholding is paid by the employer for Social Security and Medicare for FICA, and a portion is paid by the employee. And if you're withholding more as an employee than you will owe on your taxes, you may receive a refund, right? This is the thing everybody gets excited about when it comes to tax time. But if you fill out your W-4 form in a way that you're not withholding enough for your circumstances, you can still owe, even though you have withholdings. So it's really important to fill that W-4 out accurately and make sure that you don't owe the IRS. There's some great calculators on the IRS website to calculate your withholding. So if we don't touch on those in this presentation, just know that that resource is there for you. What's an independent contractor? This is the one that's going to apply to most of our self-employed folks here, because independent contractor or self-employed, the rules are relatively the same. But an independent contractor offers their services freelance. They're allowed to create their own schedule. They're allowed to accept and deny jobs as desired. A lot of gig economy workers fall into here, your Ubers, your Lyfts, your DoorDashes. And independent contractors will fill out a W-9 form for people who are paying them. W-9 form is a little easier than the W-4. It's really just so that a 1099 can be generated and issued either to your business EIN or to your social if you don't have a business EIN yet. As an independent contractor, you're going to control your work, you're going to control your tools, and that's a good indicator of whether you are an independent contractor versus an employee. In exchange for the fact that your employer is not going to contribute anything to your taxes or to your FICA, you get to claim some of those work expenses as a self-employed person or an independent contractor. Your income is not subject to any withholdings. So you are responsible for all of your taxes. This includes the self-employment tax, which is 15.3% and consists entirely of Social Security and Medicare tax. That's the self-employment tax. And your normal income tax that would be charged to you on your income. And so this is where everybody likes to talk about tax brackets. Maybe you've heard people talk about tax brackets. So if you're a self-employed person, you need to be paying your self-employment tax of 15.3, and then usually paying whatever your tax bracket is. A good way to figure this out would be to look at your prior year return or to go to the IRS website and look up the tax bracket ranges for 2023. Work-related expenses can help lower the amount of taxable income that you earn. But here's where I make a note is a lot of people talk about writing stuff off. This is what we mean when we say you get to deduct some of your work expenses. In the sort of everyday parlance, people will say, I wrote that off. I bought this, but I wrote it off for my business. Writing it off doesn't mean that it's free, and it doesn't mean the IRS is going to pay you back for it. Writing it off just means you're taking it out of your taxable income. And the only way you're going to be able to do that is if you keep good records. And we'll talk about some of those record keeping tips in just a second. But for now, that's a lot of info. Let's recap. So an employee is someone who has somebody control their work. You do not control your own work. Somebody else controls the when, the where, and the how. Somebody else pays for your tools. Somebody else pays for your supplies. And somebody else controls your tax withholdings. You get to have influence on that. You get to fill out that W-4, but somebody else is doing the actual sending it to the IRS. And usually at the end of the year, you'll receive a Form W-2. An independent contractor or a self-employed person, you control your work. This is where the famous "you are your own boss," right, comes in. You pay for all the tools and supplies you need, but taxes are not withheld from your pay, and you are responsible for making quarterly estimated tax payments directly to the IRS. And you usually receive a 1099, and you might receive it from multiple sources if you work for multiple people that year. So, estimated tax payments, what are they? So no taxes are being withheld from your pay. If you're like me, you hear this and you panic maybe. Don't panic. There are rules about it, but it's part of hanging out your own shingle and starting your own business. So both the IRS and the Illinois Department of Revenue expect you to pay your taxes in advance, even if you're self-employed. Nobody wants to be hit with a huge tax bill they can't afford at tax time. The IRS and the Illinois Department of Revenue also don't want this because the likelihood of people being able to afford all their taxes in one lump sum is relatively low. So it's required for you to do estimated tax payments if you expect to owe more than $1,000 on your taxes in the tax year. These payments are due every quarter, which is why they're called quarterly estimated payments. I sometimes just call them ETPs, but every quarter, and it's based on the income from that quarter. So payments that you receive for January to March, the estimated tax payments due April 15th, and then down the line. So April through June, the payment for that's June 15th, July through September, payments September 15th, and then October through December income's the only weird one. It's due on January 15th of the following year. So that way you get it paid before tax filing happens. If you owe over $1,000 on your taxes, which is to say you're not making your estimated tax payments, it can trigger a special IRS penalty called the failure to pay penalty. And it's calculated based on how much you owe. And I don't recommend putting yourself in a situation where you might owe this penalty. So try to calculate out your estimated tax payments and send them on time. The IRS has a form for this, which to help with the calculations, which is called the 1040 ES form, or you can go to the IRS website and we'll look at some of the great resources that the IRS has when Mike starts talking, but there will be a way for you to figure out how much you owe in estimated and make it easy, especially now going into 2024. It's a fresh start for making those estimated. So let's talk about record keeping, because we talked about things you can deduct from your taxes. And the deductions are really, really helpful for our self-employed folks, but you can only do it if you keep good records. So these are the records that we're going to recommend that you keep. And we'll talk about each one of them. A business plan, business calendar, business bank account, separate from your own bank account. It's so much easier to defend yourself in an audit if you do not have commingled funds, which is to say your personal funds are personal and your business funds are business. Mileage logs, and then receipts and bills. So let's talk about business plan. A business plan is not a one size fits all, but generally it describes your business, describes the organization structure, what products or services you sell. If you have done marketing plans or market analysis, it would be in there, and then any partnerships that your business has. A lot of times people want you to have a business plan if you're going to apply for business loans or business sort of startup funding, because they want to have a snapshot of where you're going. But why does it matter for taxes? For taxes, your business plan can really help you during an audit, because a business plan makes it clear what expenses and income will and will not fall under your business, especially if you have multiple businesses. It's a really good way to keep things separated. I have the example here of like a personal trainer is going to buy fitness equipment. A bakery is going to buy flour, and it follows logically with those business plans. But if you have a bakery trying to install a sauna, people are going to have questions, right? Hey, how does that fit with your business plan as a bakery, right? I have some resources here at the bottom for crafting a business plan. SBA.gov has a really good guide on business plans. The Women's Business Development Center offers business plan assistance. And then I like score.org's peer-to-peer business mentorship. So you could work with a business peer and work on a business plan together. Business calendar, pretty straightforward, but it's usually important to keep. I have a paper example here, but you can always do this on an app or in your You Google Calendar, you can have a personal calendar, you can have a business calendar. Really just writing down where you're going, what your appointments are for business. In this example, it's a massage therapist, and he went to a massage conference, and then he has some scheduled actual massages, the actual work he's doing, and then he has a business lunch. Having documentation of these calendar events can also match with what he spent, right? If he's going to have on his schedule C travel to this conference, it matches his calendar that shows the conference. It matches the pay income for the massages he has scheduled. All of these records are really all just going to agree with each other and sort of marry to give you evidence of what you did during the year. So the next one we have is a logbook. This is just keeping a log of everything that comes into your business, everything that goes out of your business. This is a paper one. Once again, it can be done digital. I know a lot of people use programs for this sort of thing. But really having a date, having a description, showing the expense, and he's got little codes in this one. You don't have to have little codes necessarily, but logging all the income that comes in for business and all the expenses. That's the key to a business logbook. It's going to be hugely helpful, especially to keep track of if people don't pay you on time. So it has other uses besides just taxes. All right, mileage log. If you use your car for business, key to keep a mileage log, especially if you're using a personal vehicle, because you're only able to claim the parts of the mileage that are business related. So confirming with your business calendar and your business logbook, you're going to have a mileage log of when you're driving. You usually want to write the date, you want to write where, you want to write he's got the odometer here. I do suggest that, but you got to write the number of miles. And I like this one because it has a specific column for business miles and a specific column for personal miles. This is a great way to keep track of all of that. So at the end, you can just give it to your tax preparer and they've got everything they need. If you get audited, you can just provide this documentation to the auditor and they have everything that they need. Now, let's talk about commuting, because mileage is deductible related to business, but you are not able to deduct your initial commute, even self-employed folks. This is just kind of the people who have salary jobs are not able to deduct their commutes. You're not either. So in this example, we've got our self-employed person. His name is Mark. So this is our massage therapist. So say he has a studio. If he drives from his house to his studio, works in the studio all day, and then drives home, none of those miles are deductible. Those are just his commute. If he, looking at the one on the far right, if he drives to client number one, then client number two, then client number three, and then drives back home, the ones from home and to home are the commute, so they're not deductible. The only exception is if the business owner has a home business use of the home. In that case, all of those trips for business are going to be deductible. I will say this, business use of home is a very strict requirement. It has a lot of rules about it that you wouldn't think of. And the biggest hurdle that I see a lot of people not able to overcome with that is for business use of home, you have to have exclusive space in the home that is dedicated only to business. So in this example with our massage therapist, for him to have business use of his home, he needs to have a separate room where he has his massage table and he does his business paperwork, and he does not use that room for any other purpose. So I just want to make that clear. The only time that you can claim all of those miles for business purposes is if you have business use of the home. So let's talk about tax forms. For a sole proprietor, which if you haven't registered any business entity, you are generally a sole proprietor. I've got the forms listed that you'll need to file, which is usually your 1040, your Schedule C, and your Schedule SE. Your tax preparer will do this, but it is important to kind of know vaguely what forms are needed. So that way, when you're looking at your tax return before you file it, you're responsible for what you file. And so it's good to know that everything is in there. And then the documents change depending on what your legal entity type is. And these entity types are set with the state, and they're not necessarily set with the IRS. So if you have a partnership under Illinois law, like you've registered your partnership, you have the additional form 1065, and then each partner will file the same things a sole proprietor will file. 1040, Schedule E, Schedule SE. Limited liability companies have a different form. Corporations and S corps all have different forms. So it's really key to know what business entity you have and to consider what you're going to have to file as you are forming your business and thinking about what business entity type you want your business to be. So I think that's it for my basics lesson. I'm going to throw it over to Mike Madronsik from the IRS.
Thanks, Michelle. And thank you, everyone, for being here today. I work for the IRS, and I work in an organization called Stakeholder Liaison. And our job is to go out and work with tax professional organizations and organizations that's help and support small business owners to provide IRS information regarding tax law, IRS policies, procedures, and here in this presentation, resources that you can use. So I'm going to piggyback on what Michelle has already wonderfully provided to you and show you the resources that will help you make decisions and work with the IRS to help your business grow and prosper. If we go to the next slide, please. This is the agenda. We're going to talk about tax information for businesses, information that we have through irs.gov to start a business, operate a business, and then give you a list of IRS and other federal resources. Next slide, please. So if you go to irs.gov and you're just looking perhaps for the first time for a tax information, you could use the search term tax information for businesses, and this is where you'll land. And as you can see, there's a lot of great information available for you, how to prepare your taxes, how to file and pay taxes, how to run a business over on the far right-hand side, down in the middle. You can see we've got links to help provide information on how to start a business, operate a business, and close a business. And then down below, as Michelle's already discussed, we have information regarding the various business types. When you organize your business, do you want to file returns as a sole proprietor? Are you in a partnership? Are you a corporation, an S corporation, or a limited liability company? So we have a lot of great information to help you determine how to organize your business. Next slide, please. Here we're at the starting a business webpage on irs.gov. And as you can see down the middle, all the links that are available. That first one, is it a business or a hobby? One thing you should know, if you're running, if you have a hobby, and the hobby is really defined as you're in this not to make a profit, that whether you have a business or a hobby, you have to report all the income on your tax return. But with a hobby, you can make deductions on that tax return only up to the amount of the hobby income. You can't identify a loss from a hobby. Whereas with a business, you can have losses. And so in addition, as you can see, some of the other links, selecting a business structure help for you there. A lot of employers, not all employers, do need an employer identification number. We will talk about business taxes in this presentation. Record keeping, Michelle's already discussed that. We'll give you some more information. We have a checklist for starting a business. Also, down at the bottom, types of retirement plans. The federal tax law provides a lot of great opportunities for business owners, not only to provide retirement plans for their employees if they have employees, but for the owners themselves. That and contributions to these retirement plans can be possibly used as deductions on your tax return. If we could go to the next slide. We talked about the business versus hobby. If we could go to the next slide. As I mentioned, we have information regarding to help you choose a business structure and what is best for your specific situation. On the left-hand side, you have IRS information, but as you can see down at the very bottom on the left-hand side, we do reference the Small Business Administration, the U.S. Small Business Administration's Choose a Business Structure website, which you see on the right-hand side, where you can get more detailed information. Next slide, please. As I said, not all employers require an employer ID number. Those are primarily self-employed individuals who don't have employees. But as you can see down here, we do provide links that help you determine if you need an employer identification number. As you can see, there's a lot of links down in the middle of the screen to help guide you through that process. Next slide, please. You can get an employer identification number from the IRS online. It's free, obviously. And here on this site, you can get that EIN. I don't think you can see it, at least I can't see it. Down at the very bottom, there's a blue box, which is a link to take you to apply for that employer identification number. Next slide, please. Now, if you're in a business, there are federal business taxes that you have to be aware of, and Michelle gave you great information on that. You can see down at the middle of the screen, we have links to the types of business taxes that you're going to encounter most likely. Most likely, everyone's going to have an income tax. There's estimated taxes that Michelle talked about, and the self-employment tax that Michelle also talked about. If you are an employer, you've got employees, you've got employment taxes that you will have to file and pay into the IRS. And some businesses also incur excise taxes. Next slide, please. Michelle talked about the forms that you would report your income taxes on. If you're a sole proprietor, Schedule C over on the left-hand side of the screen, an 1120S if you organize as an S corporation, and over on the right-hand side, the Form 1120. These are the income tax returns that you would file. Next slide, please. Limited liability companies, there are options for filing your federal and state taxes either as a partnership, as a disregarded entity, which means that you're filing as a sole proprietor, an LLC that can be classified as a corporation. So there are options here when you organize as a limited liability company. Next slide, please. Estimated taxes, Michelle talked about. We have resources to help you understand what those estimated taxes are that she discussed. We have here on the left-hand side a website within irs.gov that will give you information. And specific detailed information can be found in publication 505 on the right-hand side of the screen, which is the publication you should use when you're completing your estimated taxes. Michelle mentioned the Form 1040-ES. That's the form you use to calculate the estimated taxes, but you use it hand in hand with publication 505, which gives you information regarding the calculation of those estimated taxes. Next slide, please. If you're self-employed, as Michelle talked about, you have self-employment tax, which is the Social Security and Medicare taxes. So we have resources on irs.gov to help you understand what self-employment tax is, who must pay it, and how it is paid. Next slide, please. Some employers do incur excise taxes. On the right-hand side of the screen is IRS publication 510, which talks about the different types of excise taxes. And we also have on the left-hand side irs.gov information that will help you get an overview of excise taxes. Obviously, the detail is in that publication 510. Next slide, please. Employment taxes. You're an employer, you're going to be paying employment taxes and withholding employment taxes from your employees and then sending that on to the IRS, along with the employment tax forms that are required. There is a site on irs.gov that you see here on the slide where it helps you understand what employment taxes are, depositing and reporting those employment taxes. Those are withheld throughout the year and paid to the IRS throughout the year. Employment tax due dates. So there's a lot of great information to help you understand that. Next slide, please. Now, a lot of here on this slide, we're talking about the different types of employment taxes. As an employee of the IRS withholds federal income tax from my pay, along with Social Security and Medicare taxes. Employers will also pay into Social Security and Medicare in addition to what I contribute. So they're also, the employer, IRS in my case, is also contributing. Next slide, please. Some employers, based upon your employees, those employees may be incurring an additional Medicare tax that the employer would have to withhold from the employee's pay. There's also federal unemployment tax that the employers pay, not the employees. And there's also information here on this particular site within irs.gov regarding depositing employment taxes and also information on self-employment tax. Next slide, please. Now, many employers do use payroll service providers. The payroll service providers are calculating and withholding the employment taxes from the employees of the employer and also the employer's share. So the employer employs these payroll service providers to do that work for them. But we want everyone to understand, as an employer, you are responsible for every return that's filed in your name and all the payments that are made in your name. So you've got to be on top and monitoring this situation to make sure that the organizations you employ as a payroll service provider do the work that you've contracted them for. Next slide, please. One way that we try to help is provide information on this program that the IRS has set up. It's called a voluntary certification program for professional employer organizations. So professional employer organizations handle various payroll administration and tax reporting responsibilities for their clients. So you can go to this site and get information about organizations that have applied for and been approved by the IRS to be certified as a professional employer organization. Next slide, please. Michelle talked about the independent contractor situation. As an employer, you do have to identify whether the people working for you are employees or independent contractors. And a resource that we have to help you make those determinations is publication 15A that you see over on the left-hand side of the screen. I'm sorry, right-hand side of the screen. Where you can get information to help make that determination. Next slide, please. In addition, you can apply to the IRS and have the IRS make that determination for you, whether the individual is an employee or independent contractor. You would use this form SS8, send it into the IRS. Next slide, please. Michelle talked about record keeping. So in addition to the possibility of an IRS audit and wanting to have good records, we want to emphasize the fact that these good records are going to help you monitor the progress of your business activity. It's going to help you understand what's going on in your business so you can make key financial decisions. In addition, those records need to be maintained to support the information that's on the return. You have to have those records. IRS, the tax law does require that records be maintained. And they're obviously going to be critical when you're going, and a lot of employers do use tax professionals to prepare their returns. You need to have these records available and present them to your tax return preparer, and you have to have them when the IRS comes in to do an audit. Next slide, please. So the business record keeping system that we talk about, we don't need records for the income that you have, the revenue, the expenses that you have. We'll talk about a record keeping systems that Michelle discussed, and also supporting business documents. Next slide, please. A record keeping system for a small business might include these items: the checkbook, summaries of cash receipts, a check disbursements journal, a depreciation worksheet. That's when you buy assets, big items that are necessarily expensed in the year that they're purchased, but you depreciate the cost of those assets over a period of time, that you'll need a worksheet that calculates that depreciation expense. Employee compensation records are also needed. Next slide, please. Whether you keep hard copy books, pen, paper, or electronic records, it doesn't matter to the IRS. The electronic system is just as can be used. So we've got to, though, have good and complete records, whether they're paper or electronic. Next slide, please. As Michelle said, you want to establish a separate business account. Keep the business transactions separate from your personal. Reconcile your account with the bank's records regularly. Retain deposit information and use the business account for all business transactions. Can't emphasize enough keeping those separate. Can you go on to the next slide, please? Here's some of the business documents that we would want to see to identify revenue: cash register tapes, bank deposit slips where you're depositing your revenue, receipt books, invoices that you've issued, where you've generated a sale and that invoice is documenting the sale. Credit card receipts and Form 1099 miscellaneous. Next slide, please. We talked about asset purchases. You want to keep these types of records for asset purchases and for expenses. Expenses are the day-to-day transactions. You go out and buy supplies for your business. They're not the large, big purchases for equipment and things like that. These are the types of documents we want to see. Next slide, please. Documents for assets should show these items, these pieces of information, in order for the IRS to understand that the actual asset was purchased or disposed of. Next slide, please. We have information to help you operate a business. We've talked about a lot of the items that you see there listed already during the presentation. Next slide, please. It's important that you report all taxable income on your return. And these are the different ways that you can receive income. So we would be looking for those types of documentation to verify the revenue reported on the return. Next slide, please. The tax law does provide opportunities when you spend money for your business. There are business tax credits which would allow you to reduce, if you qualify, to reduce your taxes dollar for dollar. That's what tax credits do. So there are resources to help you understand the types of business tax credits. Next slide, please. We also want you to be aware that a lot of situations, there are disasters. We're talking about natural disasters like a tornado or a flood, that you should be keeping backup copies of your records in case you do find yourself in a situation, because in those types of situations where you experience losses because of natural disasters, the IRS can help you recover. We can identify losses. You can go back and take those losses on a previously filed tax return. And if they generate a refund, you can use that refund money to help you recover in your business. Next slide, please. These are some of the errors that we see small businesses make. Underpaying estimated taxes. Make sure you get that right. Not depositing employment taxes if you're an employer. Filing late and not separating business and personal expenses. Next slide, please. We do want to provide you with information to help you choose a tax preparer. Many of you do choose a tax preparer. There's no doubt that the tax law is lengthy and complex at times. Many people use a tax preparer. There is a directory of federal tax return preparers with credentials that the IRS produces. If we could go to the next slide, please. You can get information on these sites that you see on the left-hand side. That's irs.gov. And as I mentioned, there's a directory of federal tax return preparers with credentials and select qualifications. You put in your zip code and you can come up with a list. Next slide, please. We want everyone to use the electronic products that are available to file and pay, file your returns and pay the taxes. E-filing, we want everyone to use e-file. We want you to use direct deposit for your refunds. And we have a lot of online payment options to pay the taxes that are due. Next slide, please. One option is something called EFTPS, the Electronic Federal Tax Payment System. It's a free online option for you to pay your taxes. I mentioned earlier that you should be monitoring if you're using a payroll processor to make those payments and file those returns with the IRS. EFTPS will allow you to monitor those payments that are being made, hopefully, by the payroll processor. Next slide, please. We want you to be aware of identity theft. Unfortunately, a lot of identity theft is out there where scammers will try to lure you in to provide information. They'll also go and steal information from tax professionals. They'll get into their computer systems. So please be aware, be very careful. And there's identity theft information available on irs.gov. Next slide, please. Stay informed. We understand you're running a business. That's your main, what's taking 99.9% of your time. But you have to remember the returns that are being filed for your businesses and in your name, that even if you're using a tax professional, you are responsible for what is filed and what is paid. So stay aware, keep abreast of what's going on. And we've got all these online resources, e-news, that's all for free. You can get that information at irs.gov and sign up and get the information sent to you. Next slide, please. We've got other information for you at irs.gov. Small Business Self-Employed Tax Center. Next slide, please. I subscribe to e-news for small business. If there's one thing to keep you up to date as to what's going on, subscribe to e-news for small business. Next slide, please. There's also social media, IRS social media, that can keep you up to date. Next slide, please. There's an irsvideos.gov where you can get information specifically for businesses. You see on the left-hand side, highlighted business information. Next slide, please. If there's one product encourage you to go out if that's the only thing you can do, and go to irsvideos.gov and take the small business tax workshop. 8 lessons to help guide you through what we've talked about here today. Available 24 hours a day, 7 days a week. Next slide, please. We also have online tax calendars to help you understand due dates. Use that information to keep you abreast of what's going on and what you need to do. Next slide, please. We have online accounts now. IRS got a lot of funding over the last couple of years, and they're using it to increase the online portals for you. You can create an online account. This is for individual taxpayers. But if we go to the next slide, please, there's also one for business taxpayers. Use those online accounts to pay taxes, do the things that we've been talking about here today. Next slide, please. You can e-file forms 1099 that you have to file with the individuals you're employing or and with the IRS. And you can do it for free through this IRIS system on irs.gov. It's free, it's available, and we want you to use it to file your forms 1099. Next slide, please. Here are some of the IRS publications that are available for you. Next slide, please. Some more publications to help you through the process of understanding what you can do as a small business owner and federal taxes. Next slide, please. And this is my contact information. We've presented a lot of information to you today. If you have questions and you need some help, feel free to get in contact with me. Well, with that, that's the end of my presentation. Thank you very much for joining us here today. We really appreciate it.
Yeah, thank you so much. I will put my contact information in the chat since I don't have a convenient slide for it right now. I'm also seeing all the calls in the chat for people who want copies of the presentation. We'll work with the BACP on whether we can get you that, but always feel free to contact me or Mike about more specific questions that you might have. And does anyone have any other questions? We can kind of hit some of the ones that I've seen coming in through the chat. But let me type my info here in the chat first. Okay, I got that. I did see in the chat, I just want to address briefly, somebody asked if they had to register their LLC to the Illinois tax website. And the answer there is depending on your entity type, if you have to register your LLC to even get the LLC, not with Illinois Department of Revenue, but with the Illinois Secretary of State, you have to pay a fee and get your business entity made. But you also have to, you do have to register your business with the Illinois Department of Revenue. They have a really convenient form on their website. You can file it online. So I would direct you to mytaxillinois.gov in order to do that. I had another question that was, are you able to go back and restructure a business if it's not structured properly? The answer there is yes. You are able to restructure your business, but it is a legal conversion. And so I recommend you speak to an attorney if you want to restructure the business. Those are the questions in the Q&A. I'm going to back up and look at some of the ones we're getting here in the chat. This one might be a good one for you, Mike. How long do I keep my business records?
Sorry, I had to come off mute. In general, it's a 3-year period from the time that the return is filed. But if you have, for example, we were talking about the purchase of assets and that you hold those assets for quite a long period of time and then eventually sell them, that you want to keep the records surrounding those assets for as long as you own them, and then for 3 years after the date of sale. That's the general rule.
Yeah, that's great. I think I usually recommend, especially if you're self-employed or you have a business, that you keep them for 5 to 7, but 3 is the minimum for sure. And then anything longer, it's only going to be to your benefit. I think maybe it's excessive if we get to 10, but you know, that's it's being careful. Somebody had asked if we could touch on electronic payments such as Zelle. Zelle payments, Cash App, Venmo, any of those sort of transfer type apps, those are considered cash payments. So they'll be taxed the same way that cash payments are. Not all of those entities are going to issue you a 1099, especially because the law about that is currently in flux. So they're changing the laws about what amount those entities have to issue a 1099 at. Previously, I believe it was at $10,000. So a lot of people are not going to be getting that. Zelle has said that under no circumstances are they going to be issuing, I think, 1099s because they believe that they're a bank transfer app and not a payment processing app. In any case, those are cash payments and they do need to appear on your taxes. I think that's a great cash question and a great question that people need to remember, especially as they're doing starting their business in this sort of digital world that we're navigating through. I think we have lots of questions coming in. So sorry, let me filter through a little bit. Do I need to declare everything even less than $600 from one individual? Yes. Yeah, absolutely do. That's considered taxable income, even if they don't issue you a statement for it. So definitely keep track of all of it and put it on your taxes. Some people said they didn't see my email in the chat, so I will resend that. But somebody has asked, I have an LLC with 2 people. Do I file it under a partnership or an LLC? That's a question. I think you should explore the IRS resources we've talked about and see if a partnership is the right form for both of you, or speak to an attorney about structuring. But that is sort of outside our area, I think. Some questions in here I might not know if we have one that says, if as a business owner you offer a retirement account to an employee, how do we prove we are not responsible for the fine? I'm not entirely sure what fines you're referring to unless they like withdrew from that account and have penalties. Laurel, if you could clarify that. While we're still going. Somebody says any touches on crypto. Crypto is taxable. That's all I'm gonna say about crypto. Mike, do you have something to offer? Crypto is a little outside of my realm, but it is something that for quite a few years has been on the wild west of regulation, and people have thought that it's like basically free money that they don't have to report, and that is not correct.
That is not correct. Crypto is taxable, so transactions involving crypto, gains and losses, they're all reportable.
Yeah, somebody says, if I'm working with construction contractor, do I need to give them 1099s? Depends on how much you're paying them, and it depends on whether you're paying them in a personal sense or not. That would be something I think we need more details about to give you an exact answer. But generally, any payments over $600 are going to trigger a 1099. Somebody has asked if I can go back to the business expense log sample. We're going to have to cruise back quite a bit, I think, but we'll get there. This logbook, okay. Give me a sec while I put my email back in the chat because I think people didn't see it. So, and then we'll return. But any other questions? I think the chat is popping off a little bit. So if people can put them in the Q&A, I think that would help me be able to find them better.
Seeing a lot of questions about obtaining a copy of this webinar. This webinar has been recorded and will be available at youtube.com/Chicago BACP. Again, that's youtube.com/Chicago BACP. It will go up by on Tuesday. Let's see. And that's it for me. Michelle, do you have anything else? Michael?
I don't think so. I think we'll direct folks who have more extensive questions to send us emails or give us a call at the info provided, or refer back to the video recording to get that information if they missed it.
Yes, if there are additional questions or we didn't get to the questions here, didn't provide the exact information, feel free to send an email to me if you'd like.
Okay, well, thank you, Michelle and Michael, for your presentation today, and thanks to everyone for attending. It's a good day outside. It feels great outside, so get outside and start your weekend. And to learn more about our upcoming webinars, please visit chicago.gov/business education. Again, that's chicago.gov/business education. And thank you.
Thank you, everybody.